Welcome. In this video, ZBCN coin is rising hard. Has the rally started? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. A prominent downtrend that had dominated the chart for a long time and kept market dynamics under downward pressure has finally broken strongly to the upside. This falling trend line was a psychological barrier for investors. Because the price had touched this trend line many times, and each time the price touched it, sellers re-engaged and suppressed upward movements. However, the recent breakout shows quite clearly that this habitual behavior pattern has broken down, and the market has turned its direction upwards. With this breakout, the price seems to have jumped up strongly and decisively, almost as if it had broken free from its chains. Downtrend lines are not only a sloping line connecting 2 points in technical analysis, but also a visual representation of the psychological behavior and collective expectations of market participants. A prolonged downtrend shapes investors' overall perception in a negative way. During this period, investors consider every uptrend as a selling opportunity, which leads to the continuation of the trend. However, when this line breaks at some point, investors' negative expectations are replaced by optimism. This transformation explains why trend breakout, one of the most powerful constructs of technical analysis, can lead to such large price movements. In the current case, when the price reoriented towards the falling trend line, unlike the previous attempts, this time it faced stronger buying pressure. This pressure made the price not only touch the line, but also break it clearly to the upside. The strong rally that accompanied this breakout was not only a technical turnaround signal, but also a serious break in investor psychology. This is because sellers are no longer as strong as before, while buyers are emboldened by this breakout. This can be considered a very important structure that signals the beginning of a new uptrend in the market. One of the most important factors to examine during such breakouts is the trading volume. In technical analysis, for a trend breakout to be considered valid, it must be supported by strong volume. In the current situation, this condition seems to be met because the price encountered a significant volume increase while breaking the falling trend line. This suggests that the breakout was the result of a strong move driven not by small investors, but by large institutional buy orders. Such breakouts, supported by volume, often herald a new trend and confirm that the price will move higher. In addition, the rapid rise in price after such breakouts brings about a psychological phenomenon known in technical analysis as the post-close momentum effect. This effect manifests itself in strong buying pressure, especially in the first few candlesticks after a trend break. This is because technical analysis followers who see a trend breakout want to take a position without delay. This leads to an increase in demand and a rapid rise in prices. The current price action is exactly in line with this behavior pattern. The price spike on a downtrend breakout is a tangible reflection of this psychological transformation. Downtrend breakouts can herald not only short-term uptrends, but also large-scale trend reversals. Such breakouts, especially on long-term charts, have been the starting point of huge rallies in the past. This is because the breakout is not just a technical level being breached, but it also indicates that the collective mindset of market participants has changed. Investors now start to treat every drop as a buying opportunity, which makes the uptrend stronger and more sustainable. The fact that the price has risen strongly after this breakout shows that a breakout structure has also formed technically. A breakout usually means that the price breaks through a level that it has not been able to break for a long time and moves into a new area. This move often comes with new support-resistance conversions. For example, a falling trend line that worked as resistance in the past now becomes support after the breakout. This means that if the price pulls back, it can hold at that level and start rising again. In the current situation, it seems that this structure is starting to form. If the price finds buyers at this level when it pulls back towards the trend line it broke and turns up again, it would be a strong confirmation that this breakout is permanent. But we can't decide the analysis only with trends. Let's look at other metrics. Keep watching. A detailed technical examination of the chart reveals that price is once again revisiting historically significant technical levels that have previously elicited strong market reactions. These areas are highlighted between the 0.618 and 0.786 levels, key Fibonacci retracement zones often regarded as golden ratios in technical analysis, where prices have repeatedly acted as turning points. The Fibonacci retracement tool, drawn from the swing high to the swing low, not only suggests where a corrective move might end, but also indicates zones where the price may face strong buying or selling pressure. In the current price structure, applying the Fibonacci retracement tool from a previous high to the recent low clearly shows that price encountered notable resistance at both the 0.618 and 0.786 levels. These levels are not merely numerical ratios, but critical technical zones where market supply and demand dynamics shift and collective investor psychology often comes into play. Upon the first test, price climbed to the 0.618 level and then sharply pulled back, a sign of just how significant the 0.618 retracement is, as it is the most closely watched Fibonacci level. On the second upward attempt, price once again reacted with selling pressure upon reaching the 0.786 level. These two zones have now evolved from simple retracement levels into major resistance areas that the price must decisively overcome. Such setups are commonly observed in technical analysis. When price has reversed from a specific level in the past, investors pay extra attention when it is retested. Especially large players, algorithmic trading systems, and professional technical analysts monitor price behavior closely as it approaches these zones. That's because these levels often mark either the beginning of a major reversal or the breakout into a brand new trend. Currently, price is advancing once again toward the 0.618 and 0.786 Fibonacci levels that previously triggered reversals. As trading volume begins to increase while approaching these levels, it suggests that investors are once again taking notice of this zone. If price manages to break through these levels with strength, rather than just testing and pulling back as it has before, it would indicate that a major technical and psychological threshold has been crossed. The 0.618 level in particular is known as the golden ratio in technical analysis and is a core element in many natural structures, works of art, and even DNA strands. Its relevance in financial markets is attributed to the direct influence of human psychology and behavioral finance. Investors often place significant, conscious or unconscious, importance on this level, resulting in unusual market reactions whenever price nears it. As price approaches this area, decision-making accelerates, stop orders are frequently triggered, and volatility tends to increase. Past reversals confirm that these levels have functioned as strong resistance. However, another crucial concept in technical analysis is what happens if resistance is broken. The more times a resistance level is tested, the more likely it is to eventually weaken. From this perspective, the price nearing the 0.618 and 0.786 levels for a third time increases the chances of a breakout more than ever before. Previous sellers who acted at these levels may have already exited their positions or may now lack sufficient strength. If price succeeds this time in breaking through these previously reactive levels with strong volume, it would signal not just a short-term rally, but a major technical shift in the market. A breakout beyond Fibonacci retracement levels is a strong indication that the prior downtrend has ended. A move above the 0.786 level in particular significantly increases the likelihood of reaching and even surpassing the previous high. Rallies following such breakouts are often sharp and rapid. The breach of these resistance zones causes participants who had previously been positioned short to exit, while also attracting new long entries. Additionally, the triggering of stop-loss orders can accelerate upward momentum, propelling price quickly to prior highs and potentially initiating a new uptrend. Investor reaction as price tests these levels for the third time will be crucial. If strong selling pressure reappears, as in previous attempts, it would suggest that Fibonacci levels are still functioning effectively and could reinforce a bearish scenario. However, if this time price is moving more steadily, volume is increasing, and other indicators are also supporting the upward move, then we may have a strong signal that a breakout is imminent. ATR, which stands out as one of the remarkable technical signals when the chart is analyzed, shows a significant increase in recent price movements. This rise is a clear indication that the market has moved away from its quiet and horizontal course and started to enter into more energetic, harsher, and more pronounced fluctuations. ATR is a powerful volatility indicator that measures the average actual price range of a financial asset over a given time period, and the fact that it is currently rising indicates that a significant shift in market dynamics is taking place. The basic logic of the ATR indicator is to help us understand how much room to move an asset has, not how much it moves. In other words, ATR neither gives a direction nor a buy or sell signal. But it is an extremely effective tool to understand whether the level of risk in the market is rising. A rising ATR indicates that price candles are getting longer, with prices moving in wider areas, both up and down. This suggests that traders should now be ready for bigger price swings.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.